Larika, thank you so much, and welcome again, everybody. And good afternoon to all those on the East Coast and in the middle of the country, and good morning to you on the West Coast. We are really happy to have you all here today. We thank you for taking the time out of your busy schedules. Um, Mark Vickness and I were actually at the Seattle conference a couple of months ago. We talked to a lot of you. I know that you have very, very, very busy and pressured schedules. So to take time out to hear this webinar is very gratifying for us, and we thank you. Our goal today is in this webinar entitled Protecting Your Clients with an ERC Forensic Review. Our goal is, we have several goals actually. We are really looking forward to imparting information to you that you can use for your clients, for your firm, maybe for your alma mater. On this call, I'm going to introduce the presenters in a few minutes, but 3 of our 4 presenters are attorneys. So we have a very keen understanding of what it means to be able to provide additional value to your clients. And this particular area of employee retention tax credit is something that's very, very timely. I'm sure you've all been bombarded with advertisements about applying or filing for these benefits. And there's a lot of controversy about what's going on now. So we want to give you enough information, arm you with information that you can take back to your own firm to help your own firm navigate this area. Perhaps more importantly, take back to your firm so your attorneys are armed with information for forensic reviews that they can use to help their clients and add value to the attorney-client relationship. We're going to talk a little bit about what our ERC is, a little bit about the history of how ERC came to be, what its current status is, how an entity would qualify. We'll talk about how the process of qualifying happens. We'll talk very specifically about the forensic review program that Sheridan Advisors has in place, a referral program, and also some of the protections that we offer to our clients when we take them through the process. So Larika, if you would, let's just talk about some of the presenters here today. I'm thrilled to be able to say that our president of Sheridan Wealth Advisors, Mark Sheridan, is here to offer a lot of information about this ERC program. Mark founded Sheridan Wealth Advisors in 2003, and since then has created over $200 million of wealth for his clients. He pioneered forensic reviews in the life insurance industry. He's been extraordinarily active in his community for 40 plus years, and he's authored a lot of white papers on life insurance and annuities. It's very fitting that Sheridan Advisors started as a forensic review company for insurance products, and now we are doing forensic reviews for the employee retention tax credit. Next up will be Gabriel Malavolti is, I like to think Gabe is sort of like the Swiss Army knife of finance. Gabe has a Juris Doctor degree and an LLM in tax from the Loyola University of Chicago School of Law. He is also a certified public accountant. He is licensed insurance agent, realtor, financial advisor. Before working with the Tavala Group, which is where he is now, he was the international tax manager at PricewaterhouseCoopers, where he specialized in international business structure and foreign currency. He's also a new dad, and we're thrilled to have Gabe here as a wealth of information about employee retention tax credits. The third person up will be Mark Vickness. Mark is an attorney practicing for over 25 years in California. He is a certified specialist in workers' compensation. He has served as a judge pro tem for 15 years of his practice. He's repeatedly testified before the California legislature and was appointed as an advisor to the then candidate, Gavin Newsom, on the workers' comp system in California. And we are thrilled to have Mark here too. last but not least, my name again is Peter Itzler. You cannot see me. That is not a bad thing. The other guys on the program are much better looking than I am. So you catch a break, you're going to hear my voice, but won't see me. I've been practicing law in Florida for 39 years. And interestingly, I'll just say this very quickly. Mark Vickness and I became advisors and affiliated with Sheridan Advisors because we went through the ERC process uh, with Sheridan Advisors. And we were so impressed by the results and the professionalism that we saw during our stint as clients that we became directors with Sheridan Advisors. So what we're going to do now, with that bit of background, is turn this over to the president of Sheridan Advisors, Mark Sheridan, who's going to talk a little bit about what ERC is, give you a little bit of history, and where the program is now. So Mark, I'm going to hand the mic over to you.
Thank you, Peter. Again, good morning and good afternoon to everybody. Just briefly, ERC, Employee Retention Tax Credit, or shorthand ERC, was created in the CARES Act of March of 2020 with the PPP, better known program. At the time, you had your choice of one program or the other. As the pandemic continued in December of 2020, Congress passed a second CARES Act that said even if you got PPP, you could also file for ERC benefits if you qualified under the program. Fast forward, many companies and organizations, not-for-profits, schools that were impacted by the pandemic have filed for ERC benefits. On September 14th last month, the IRS issued a moratorium, and many of you, or maybe all of you, are familiar with it, but if not, it's important. The IRS commissioner had been saying for a month or two he felt like there was a great deal of fraud in the filing process, that many companies did not qualify, that a lot of the providers were not familiar with the law or took advantage of their clients and filed for maximum benefits, again, though not qualified. They also said that they would be introducing an amnesty program for people that weren't comfortable with their filing upon reflection. And last Friday, they introduced that, so that if you have not yet received benefits, you can withdraw your filing and avoid any potential problems. They have also mentioned introducing an amnesty program so that if you've received funds that you now, upon reflection or in consultation with your CPA or your auditor, believe that was either too aggressive or, in a worst case, fraudulent, that you could return the money, again, under an amnesty program. That has not yet been announced, but they did speak about it, they being the IRS. So all of this then sets the stage for what I will talk about in a few minutes in regards to our forensic review program. But our company and our team has now done a little more than 3,200 filings, again, all across the country, helping our clients that either have received, in many cases, or will receive over $300 million in benefits. We know the law well. We take a very conservative approach. And Peter, I'll turn it back over to you as we move through the program.
Okay, Mark, thank you for that. We wanted you all to hear a little bit more about the ERC program from Gabriel Malavolti. As I told you, Gabe has a JD degree and an LLM in taxation, also is a CPA, and is really quite expert in a lot of the IRS regs and advisory opinions that have been promulgated with regard to the ERC filing. So Gabe, if you would, let's talk a little bit about how firms or entities would qualify for ERC, some of the things that are important for the audience to know about that. And I'll leave this to you. I'll turn the mic over to you now.
Gabe, can't hear you.
Here we go. That would work. So to qualify for the ERC, There's two different sets of rules. One is for 2020 and one is for the first 3 quarters of 2021. In 2020, you have to be a small eligible employer, which means under 100 full-time employees, without regards to part-time employees, aka full-time equivalents. And if you are under 100 full-time employees in 2020, you're considered a small eligible employer. Once you check that box, you move on to, do you have any periods of eligibility? And period of eligibility is going to be defined by whether or not you had a certain revenue drop in a quarter compared to 2019, or whether your company was subjected to a partial suspension due to government orders. The revenue path to qualification is what's called a safe harbor test for tax purposes. It's a bright line test. You follow the same method of accounting you use for your tax returns. In 2020, if you hit a 50% drop in a quarter compared to the same quarter in 2019, you start a period of eligibility. That eligibility rolls forward until the quarter after which you top 80%. So when you hit the 50% reduction, you automatically get 2 quarters, if not 3. For the clients who do hit that, it's usually in Q2 of 2020, which means they would automatically get Q3 and potentially Q4. However, the more frequent path to eligibility is partial suspension due to government orders. This is where a lot of the subjectivity comes into play. It is a facts and circumstances analysis. It's qualitative. There are certain aspects to it which can be quantified. However, there are certain aspects which we like to call your gut test, which are tough to numerically quantify, meaning that it isn't going to result in a bright line test. To qualify underneath the partial suspension due to government orders test, you have to have orders from a binding authority, local, state, federal, etc., U.S. authority, that is on a greater than 10% part of your business. So the orders have to be on greater than 10% of, as defined by either revenue generation or labor hours. Once we top that 10% threshold, we then have to determine whether or not the orders created a more than nominal impact. This is where all of the nuances come into play. So more than nominal impact, the IRS loosely defines as they want to see that it's roughly 10% impact on your service offerings. This can be service cancellations, that certain services are no longer able to be offered. This can be that services have to move from in-person to virtual, and the move to virtual creates such a change that it isn't substantially comparable to the in-person service offering. Or the third aspect we look at is capacity. So is the capacity of the service hindered through either social distancing orders, capacity restrictions, a move to virtual or an alternative format? At the end of the day, what we need is the service that's being offered, or the service that has the government orders that are on it, has to be not substantially comparable, i.e. less than 10% or greater than 10% different than what it was pre-COVID or post-COVID. Once we determine that you have that fact pattern, your period of eligibility is day by day, meaning that you would continue to be qualified for the ERC so long as you have the government orders in effect and the more than nominal impact both. Once we determine your period of eligibility, substantiate it with the various government orders, there is a mathematical, qualified wages that have to be taken into account. The qualified wages are going to be all eligible wages during your period of eligibility, so long as you're a small eligible employer. Those eligible wages will be reduced by ERC coordinated grants, which are the PPP, the shuttered venue grants, and the restaurant revitalization funds. So those 3 grants do get netted against payroll. We do have some flexibility on how we're allowed to apply that payroll according to the eligible wages. There's a certain cap per quarter. In 2020, there's a wage cap of $10,000 per employee for the full year. Once we go into 2021, the rules shift in that the revenue rule now is 20% drop in a quarter compared to the 50% that was in 2020. So many more people qualify on revenue in 2021 as the threshold is lower. The rules for partial suspension stayed the same. So we still have to show that the government orders were in place and a more than nominal impact was there. The biggest shift in 2021 is that the credit is much larger. So in 2020, it was a 50% reimbursement of wages paid up to $10,000 of wages, i.e. a $5,000 credit. In 2021, it is a 70% reimbursement of wages paid per quarter. So there is a maximum credit of $21,000 based on $30,000 of wages available in 2021. Alternatively, there's a fourth quarter availability for recovery startups, meaning any business that started after February 15th of 2020 and is not part of a larger affiliate group gets default eligibility for Q3 and Q4. Long story short, once we kind of walk through the entire analysis to determine the period of eligibility and we do the math on the qualified wages, then we kick out the total credit that's viable based off of both revenue reduction and partial suspension due to government orders. In order to do a filing or to do a forensic review, we're going to have to show or review the payroll data. So it starts off with payroll by quarter by employee for 2020 and 2021. We need to see revenue, which is broken down by quarter in the method of accounting in which taxes are filed. So if it's a cash basis tax filing, it has to be cash basis books. Same for accrual. We also need to see the 941s that were filed. In many cases, there are PEOs involved, which makes it a little bit slower because the PEO has to be the one who actually does the filing. We need to see any of the ERC coordinated grants. So usually that means PPP, which is the amount, the dates it came down, and the covered period, which is the most important for us. Then the other two grants being the Save Our Stages, the Shuttered Venue, and the Restaurant Revitalization Fund. So once we walk through that process, we determine the full amount of credit. We meet with the clients to determine whether or not they had a more than nominal impact, what that looked like. We get a narrative kind of laying out their facts and circumstances, and we come up with a comfort level on where we are in the period of eligibility.
Okay. Gabe, thank you for that. There is a question. Somebody must have anticipated this. So the question is, we were told that our firm did not qualify, but a fair amount of our work is related to litigation in many fields. How much do the court closures need to affect our firm to know if we would qualify?
Good question. So this goes back to our partial suspension due to government orders analysis. And as we mentioned, this is subjective. It's going to be based off of your individual facts and circumstances. Normally, we always start with what the leaders of the firm's opinion is about where they were impacted, when, how, why. Generally speaking, we filed for a number of litigation firms or firms that are majority litigation throughout the nation because the move to a virtual environment for many created significant issues with the ability to get things scheduled, to get things pushed along at a normal pace, to get depositions scheduled, for work comp cases, to even get into doctors' appointments to get medical exams done. Nothing was really operating in a substantially comparable environment until sometime in 2021. That's going to be largely based off of the type of law that you practice, the county that you're in, what courts you go to, how efficient the judges were with virtual, et cetera. But I'd say, 85% of the law firms that have a very heavy litigation focus were adamant that these moves from in-person court to virtual court created a more than nominal impact on their ability to offer a substantially comparable service offering throughout most of 2021. Normally, we look at the facts and circumstances, we break it down, and we get to a point where we dictate a level of comfort. So there have been a few law firms that I've analyzed where I could only get to a more likely than not level of comfort, which is a 51% level of comfort. And we kind of talk through why we're there instead of at a higher level of comfort. And at that point, the firm usually makes their own decision as to whether or not the impact that was in place was more than nominal.
Okay, that's very helpful. So in factoring this in, what you just said before, if a firm is qualified, they could qualify up to, or an entity, a client of a firm could qualify for up to $26,000 per employee if they were affected by a government order or by a revenue decrease. Am I correct about that?
Correct. 5,000 in 2020 and 21,000 in 2021. Many law firms actually have a longer period of eligibility than most for-profit businesses because the court orders in most states were in place into Q3 of 2021. whereas many businesses that file based off of partial suspension rely on social distancing and capacity restriction orders, which in many places were lifted in Q2 of 2021. So litigation firms are actually uniquely positioned to have a longer period of eligibility compared to many other for-profit businesses.
All right, Gabe, thank you for that. What we wanted to do now was we wanted to show the audience a video that was provided to us by someone named Brenda Allen. Brenda Allen is a college president, and we wanted you to hear a little bit about her experience with the ERC program. I think she was inundated with calls by people who wanted to help her with this process and was a little bit confused by how to proceed. And we were someone referred her to Sheridan Advisors. Larica, is it possible for you to share that with our group?
Hi, my name is Brenda Allen. I'm president of Lincoln University, the first degree granted historically Black college in the nation. I want to talk to you a little bit about the ERC. So I had received many emails from different organizations offering to help me with the ERC. I didn't know what it was. I didn't know if we qualified, but after having a conversation with Ricky, it became really very clear that my institution would be qualified and that I could trust them to be able to look at my data and to apply for the credit for us. The ERC is very useful, I think, for small colleges. Even prior to COVID, small colleges were struggling with their financial modeling. So being able to have access to cash that can help to make our schools whole, especially after all of the sacrifices that we had to make in order to stay healthy through COVID, I think is just a great opportunity. And so it's really important, I think, that small colleges understand how important this credit could be to really helping them to get back on their financial feet after all of the turmoil and financial sort of woes that we suffered through the COVID pandemic. So if you're really looking to see whether or not your institution is eligible for the ERC, I really suggest that you reach out to Ricky and his group because they are very helpful and very collegiate and very successful. So thank you and good luck.
Larica, thank you for sharing that. I wanted next to bring in to this discussion Mark Sheridan. Mark gave us a little introduction before to the employee retention tax credit generally, but Mark, talk to us a little bit about how the law firms can really add value to their attorney-client relationships with the forensic reviews. You started Sheridan Advisors doing forensic reviews for insurance policies. Please tell us how forensic reviews in this arena can really help add value to the attorney-client relationship.
My pleasure, Peter, and thank you for asking. We had been approached over a few months ago by a number of schools that had heard some of their peers describe bigger credits than they had received. That was the first time we thought about introducing our forensic review skill set to ERC filings. Then when the IRS came out with the moratorium, we realized that a small fire had turned into a bonfire, and there was a real need for these forensic reviews. We had gone from providing a nice service to a really valuable one. We were about to launch last week and then hit a company-wide, a law firm-wide tech problem. So we hope to kick off next week or later this week with a very large, probably ALA member. I didn't check, 900 lawyer firm that is going to be bringing our forensic reviews to their clients through that. Again, there are 900 attorneys. We are talking to two other very large firms. Again, after this call, we'll look to see if they're ALA members, which would make it even better. These are very large firms that many of you would be familiar with. They believe that their clients have exposure that they don't fully understand. I will tell you that 95% of heads of organizations or businesses, whichever was the filer, really do not understand their credit. They just don't. They relied on whichever person or company that did the analysis that everything was done well. They were happy with the 6-figure benefit or 7-figure benefit. And now many people are concerned because the IRS has caused the flag of caution to be raised appropriately. So in our own analysis, we have forensic reviews that will put people basically into 3 categories filings. One is that you did a really good job, you're in good shape. That right there is comforting. The second bucket is you filed for too much, just way above industry averages that we have lots of data on from our own clients. And we direct you back to your CPA to get some more information from the company that did your filing. Or if you want, we'll take you through a deeper dive for an additional cost, because our standard forensic review, which is deep enough for almost everybody, is free of charge. The third bucket would be if you filed, but you did not file for the credits that you properly deserve, meaning you left money on the table. And an easy example, which is the most common, is that the person, again, company or CPA that prepared your ERC filings only did the revenue test. As Gabe mentioned, there's 2 tests, the revenue test and the government order more than nominally impacted. Most CPAs are not comfortable with the latter, the government order test. So they only rely on the revenue test, but mistakenly leave their clients believing that that's all they qualify for. So when we have clients that come to us and say, hey, did I do this well? We'll tell them which of the 3 buckets, and if they have underfiled, we'll assist them in identifying the additional credits, take them through the rest of the process and file accordingly. Under that scenario, we get compensated. There's, again, no charge for our forensic reviews. So we have the letters that you can send to clients. We have the letters that you can send to your lawyers. You can make any changes, of course, that you'd like, but we feel that they're really effective, and it would be a real pleasure. We'll talk about the economics that come to the law firm for being of assistance in this regard in just a couple of minutes. But it is a really valuable service for which your clients that I'm sure already like you and your firm a lot will be immensely grateful, particularly if they fall into either the second or third bucket where they've overfiled and may want to take advantage of the IRS amnesty, or substantially underfiled and will be able to receive significant additional benefits. So if this is of interest to you and the firm, again, please be in touch with us, in particular, Peter Itzler and Mark Vickness. But we're all going to be working together and available to you and your clients. Peter, thank you.
Mark, thank you. Yeah, and that amnesty important obviously is very important, and that's one of the reasons why it is so important for the people on this call to understand the importance of a forensic review for your clients, because if they did overfile, the IRS is allowing this amnesty program. And Mark Vickness, we just heard that testimonial from Brenda Allen. I'd like you to talk to the group here a little bit about the referral program that is in place at Sheridan Advisors.
Peter, do we have Mark's audio up and running?
I don't know.
Okay, because I know that Larica was working on that because we were having some trouble.
Well, Mark, would you like to take that subject then, if Mark's frozen out?
Okay, our pleasure. I'm pretty sure Mark can hear this. Sorry, you're not able to join both with video and audio. But Mark is a very talented, successful attorney, as mentioned, and is working with us closely. We'll work with you and your clients to the extent you express interest. So we have a couple of other programs. One is the Alma Mater program. We've already been doing this with attorneys and other firms around the country. We know it's successful. we do know that most colleges qualify, most meaning 90% of colleges. They got to be, again, under 500 full-time employees, though many of them have part-time employees. And most of us have a fond feeling about our alma mater. We have, again, similarly as mentioned with the forensic reviews, we have sample letters that we've already prepared. We use AI. We've built a software program with artificial intelligence so we can quickly go through your law firm, identify which lawyers went to small colleges. Again, they're likely not your clients, so there's no issue of conflict or other things of that nature. And it's a way for the lawyers to help the alma maters in a really significant way and bring revenue to the law firm. So that's another program that we're really getting a lot of traction with and have helped both colleges and the lawyers with the feel good from helping those colleges. To the extent that the second program, your firm may represent either in higher education, large schools or colleges, or in the healthcare representing hospitals or large health facilities. Those are all likely to qualify for ERC benefits. We have found maybe half of colleges in America have yet to file, and a decently, if not substantially larger number of hospitals that haven't filed. There's different ways to qualify for ERC benefits if you're under 500 employees as a hospital. But if you are over 2,000 employees, a large hospital that may have even 10, 20, 50,000 employees, if they have not filed for ERC benefits, then there's just one question that you or we would like to ask them, which is, did you send your employees home in 2020 or 2021 and pay them to do nothing but recover from COVID? If they were at home, then they couldn't work in the hospital. And if they were paid for that, then that is an ERC qualifier. If they haven't filed, we need to speak to them because we could be of tremendous benefit. So that is the second program. We believe we have a generous way to show our appreciation for either the alma mater program or introduction to clients, whether they be, again, colleges or hospitals or large not-for-profits. We have a list of 20 different what we call high impact industries. So if you have clients in these fields and they have at least 50 employees, then if they haven't filed for ERC benefits, then they really would want to have a deep look and would trust us as a general rule because they would have been brought to us through you and from ALA to you, and again, from so many of our peers. Again, please go to our website and see numerous law firms and others raving about our really quality service. Our referral program, we have referral agreements, but essentially, in short, if we are able to work together on the either alma mater program or for your larger clients, if there's 100 employees or more, which would generally be the case, we pay a $20,000 fee to the firm when we file the formal paperwork, which are 941X returns. That's for the first 3 cases. The next 3 we pay $30,000, and from the 7th case on we pay $40,000. And we do have some law firms that are either in the $30,000 or $40,000 range because of helping clients, alma maters, things of that nature. For the forensic reviews, the 941X fees, the referral fees that we pay to the firm are 1/2 of the standard for a new case because the credits are smaller, but we still, again, want to show our appreciation. So the primary motivator for forensic reviews is really to help and protect your clients. For those that are in the recent 2 programs, the alma mater program and the clients of the firm for ERC benefits. That's just to bring them tremendous benefits and to take what's already a good program and make it a relationship, and make it an even better one. So if we can be of service for any of those 3 programs, again, please reach out to us, because it would be a pleasure. If you think there may be and you want to have a follow-up call to discuss any of these, Mark, Peter, and I will be available to you so we can talk about it to you and any of your peers at the firm. Peter, thank you.
Mark, thank you. So we've got about 10 minutes left. I've just got a couple of sort of potpourri items I just wanted to mention to the group, and in no particular order. But again, getting back to the value add that the law firm can provide to their clients, with these forensic reviews, when people have overfiled, the possibility of providing them with the opportunity for IRS amnesty obviously is hugely important to your clients. If they've underfiled, the opportunity to get whatever it is that they are legally entitled to also creates a value add that you've provided to your client by recommending a forensic review. When we do these forensic reviews, unlike some of the other firms out there, we are very careful to make sure that um, our file is prepared for an audit. So we have, as a routine matter, a government order nominal impact letter that is put in the audit file, so that if in the event one of our is audited, or one of your clients is audited, there is a record by that's contemporaneous with the filing that shows why it was that the firm felt that there was more than a nominal impact on them, which is hugely important, because the audit may not occur for years. And so the idea of having a contemporaneous letter in the file to protect the client is enormously important. So that's another way that your your lawyers can feel comfortable about recommending a forensic review. Um, there's also an audit defense that is provided by Sheridan Advisors, so that if a client is audited, and if they were to have found, if the IRS were to find that there was an impropriety or a miscalculation, there is audit defense that's provided by the firm. To date, we've had exactly one of our clients audited, and that audit was rather short. It turned out to have all that the IRS did was validate um, our findings, and it turned out to be really a kind of a validation of our process and protection of our clients. Um, but if you are dealing with one of your clients that is a large institution, like a Lincoln University or a hospital that has many employees, and they're looking at a 7 or 8 figure credit, and they're dealing with a board of governors or um, a board of directors that is a little skittish about getting a 7 or 8 figure credit, there is the opportunity to get a opinion letter from a law firm that we are in contact with, several law firms, or in extremely large cases, a guarantee of credit from an A+ rated insurance company. So if somebody is looking at a $15 million credit, they have the option, if their board of directors is concerned, to pay for insurance that would guarantee the credit regardless of the outcome. And you may be wondering, well, how is it possible? Gabe said that there's a limit on the number of employees. It's 500 employees. How could you possibly get a $15 million credit if you've got a $26,000 cap per employee? Well, there is a large employee exception to the employee retention tax credit, which incredibly a lot of tax professionals do not know about, and consequently a lot of large institutions are not taking advantage of. But as Mark said before, if an employer sent employees home during COVID and paid them not to work, if they had more than 500 employees, they would be entitled potentially to this large employee exception. And and that is something that if a law firm uncovered that with one of their clients in one of these audits, or in combing through their clients, there is a referral fee paid for that as well. I neglected to mention at the outset that I did mention that Mark Vickness and I were at the ALA convention a few months ago in Seattle. What I neglected to say was that ALA is actually one of our clients, and we're taking them through the filing process right now. Lastly, I know we're running out of time. We have a couple of questions I want to get to, but it's important for your clients or for your own law firm to get in the queue now, even though the IRS has a moratorium in place at the moment. It is expected that the moratorium is going to be lifted in January. We don't know that for sure, but that's the rumblings that we're hearing from the IRS contacts that we have. And it's also important to get in the queue now because the statute of limitations for the 2020 benefits is going to run in April of 2024. As lawyers, we're all terrified of statute of limitations. It's important to know that if you're interested, or if your clients are interested in applying for these benefits, they need to do so before April of 24, because that's when the 2020 benefits are going to expire. Gabe, I just want to call on you. We've just got a few minutes left before we get into any questions. What kind of pushback are you getting, or what kind of errors are you seeing out there when you're doing these forensic reviews?
Yeah, so the most common error in terms of people overfiling is that whoever did it for them did not properly take into account the ERC coordinated grants, mainly the PPP. They either didn't apply it at all, or they had the wrong covered periods, or they didn't know how to apply it, and they didn't apply the proper wage caps, et cetera. So that's the biggest issue on the ERC filings that were overfiled, and the IRS has kind of come out and said that. On the underfiling side of things, I think most people don't understand the path to eligibility. So a lot of CPAs have only looked at revenue reduction, not at partial suspension due to government orders, and as a result have told their clients, colleges, hospitals, other for-profit businesses, that they don't qualify. And normally there's a little bit of a domino effect where once we work with one or two, for example, colleges or community colleges within a state, that there usually ends up being 5 to 10 that kind of fall in line and say, well, I have the same fact pattern, so I probably qualify too. What we have to do is we have to get on a Zoom with the auditors usually and walk them through to get them comfortable before we actually move forward with filing. One of the big things that jumped out, and this is still a debate amongst auditors, but is all this other government funds that came in. So there was HERF funds, which were higher education emergency relief funds. There were HHS funds, which were Health and Human Services funds for hospitals and medical providers. And those are not ERC coordinated grants. PPP, Restaurant Revitalization Fund, Save Our Stages, those are. And so a lot of CPAs originally said, well, these should be considered like other grants and net out against ERC eligible wages. But there's nowhere in any IRS guidance that says that. So a lot of CPAs originally pushed back on that. So they did not think that the colleges or hospitals or other businesses qualified because they got other government subsidies or government grants. And then additionally, they thought even if they did qualify, there wouldn't be eligible wages left to claim because they had already paid for wages with government grants, both of which are false unless we're talking about the ERC coordinated grants. So those are some pretty key areas. The biggest thing for us is that when we can kind of cut out the noise and just go direct from me to the auditors, that usually is when we start to see some progress on determining whether or not there's eligibility there.
Great. Well, thank you for that. Larica, I know we're pushing up against 2:45 here on the East Coast, and I think we're out of time. We have a couple of questions left, but perhaps what we should do, because I know we do have to adhere to this time limit, maybe we can just invite people who have additional questions to reach out to us through the website, or we'll circulate our email addresses. We're happy to answer any questions that you have regarding the ERC process, regarding forensic reviews, regarding the moratorium and how that's being handled. And I guess what I'll just say in closing is, again, we really appreciate, we know how busy you are. We know how hectic your schedules are. We hope that these last 45 minutes gave you some insight into the employee retention tax credit system, into the value of having a forensic review for either your own filing or for the filing of your clients. We hope you see how you can, as a law firm, can add value to your clients with this newfound knowledge about employee retention tax credits and the possibility of a forensic audit, a forensic review. And again, all of us on the line today, thank you so much for your attendance and your attention today, and we wish you a good day and a good week. Thank you so much for being with us.
Thank you, everybody.